Hi everyone. Today we are going to discuss about 11th standard accountancy unit 12 final accounts of sole proprietors, introduction of the final accounts. Okay, why every business enterprises prepare the final account? Because they want to know the profitability and financial position of the business. When the final accounts are prepared, the final accounts are usually prepared at the end of the accounting period. On what basis the final accounts are prepared? It's based on balances of ledger account and shown by the trial balance. Okay, what are the classifications of the final accounts? The final accounts are classified into three categories. What are they? Trading account, profit and loss account, and balance sheet. Okay, what is the purpose to prepare the final account? To know the financial performance of the enterprises and to know the financial position of an enterprises. Okay, first let's know the format of the trading account. Okay, the trading account, the heading of the trading accounts contains the word for the year ended. The period what they given in the question we have to enter here. Okay, then trading accounts have two columns, two sides, debtor side and creditor side. Debtor side has three columns and creditor side has the three columns. Debtor side we have particulars, inner amount and outer amount column. Creditor side also we have particulars, inner amount and outer amount columns. First let's take the debtor side. Okay, what are the items shown on the debtor side of the trading account? Opening stock. Listen, we always started with the word to on the debtor side and we always started with the word buy on creditor side. Okay, first we started with opening stock on the debtor side of the trading account. Okay, what is the meaning of opening stock? Opening stock means the stock of goods remaining unsold goods at the end of the previous year is the opening stock of the current year. Okay, so we always started with the opening stock on debtor side of the trading account. Okay, then purchases. The goods which have been bought for resale are termed as purchases. Purchases includes cash purchases and credit purchases are shown in the debit side of the trading account. Then purchases returned. Goods were purchases which returned to the suppliers are termed as purchases returned or returned outwards. Purchases minus purchases returned or net purchases is to be entered into the outer amount column. Okay, then direct expenses. What is the meaning of direct expenses? All the expenses related on purchases of goods and the bringing that goods to the godown or business enterprises. So these are known as direct expenses. They are debited to the trading account and direct expenses include the following are carriage inward or freight inward, wages, dock charges, octroi, royalty, import duty. Okay, these items are collectively called as direct expenses. Let me see one by one. Carriage or freight inward. The amount paid for transporting the goods purchased to the godown or business premises are called carriage inward or freight inward or carriage on purchases. Then wages. Amount paid to workers who are directly engaged in loading or unloading and handling good purchased is known as wages. Then dock charges. The charges levied for shipping the cargo while entering or leaving docks is called dock charges. Okay. Then octroi. A tax levied by a local authority when the purchased goods enter the municipal limits. Then royalty. The amount paid to the owner of a mine or a patent for using owner's right. Import duty. The taxes paid on import of goods are known as import duties. Then, to cost of the goods manufactured. Examples such expenses are raw materials, coal, gas, fuels, water, power, factory rent, packaging, factory lighting, royalty on manufacturing goods, etc. The total of the cost of the manufacturing goods is transferred to the debit side of the trading account. Then, what are the items are shown on the credit side of the trading account? Sales. We always started the word buy on credit side of the trading account. Okay. So, sales. The first item is sales. Both cash sales and credit sales is to be included is called sales. Okay. The sales account is shown on credit side of the balance. Listen, we have to subtract sales return from the sales account. We will get the net sales. Okay. Similarly, we have subtracted purchases return from purchases. We will get net purchases is to be entered in the debit side of the trading account. Similarly, we have to enter sales and sales return. The net sale is to be entered on the credit side of the trading account. Then closing stock. Listen carefully. On debit side, we entered opening stock, right? Already we have unsold goods taken from previous year, and it is to be entered it on the debit side of the trading account called as the opening stock. Okay, and during the current year we purchased some goods, out of that we sold it. Okay, and finally we have remaining unsold goods at the end of the accounting period. That remaining unsold goods is to be entered it on the credit side of the trading account or called as closing stock. Okay, so closing stock is always entered into the credit side of the trading account. Then finally we have to balance it like ledger account. For that, to find which side has the higher value, consider it as the total on both sides. Okay, and the difference between the totals of two sides, the trading account indicates either gross profit or gross loss. If the total of the credit side is more, the difference represents gross profit. On the other hand, if the total of the debit side is higher, the difference represents gross loss. Okay. The gross profit or gross loss is transferred to the profit and loss account.